$200 million gone in 46 minutes. But what happened the 8 days that followed is the reason I think DeFi lending has a future. If you have ever wondered whether you can actually trust DeFi lending with serious money, by the end of this video you'll have a clear evidence-based answer. I am Mauro Terrinoni and this is CryptoPartnerClub.com. But I need to start from what went wrong. Aave is the world's largest DeFi lending protocol. Think of it as a bank that runs entirely on code. There are no loan officers, no client reviews, no credit committees. If you deposit crypto, you earn interest. If you want to borrow crypto, you must post collateral. As of nearly 2026, Aave held over $40 billion in deposits. That's a very large amount, larger than many regional banks. A separate company, smaller protocol called KelpDAO, issued a token called rsETH, real staked Ethereum, essentially a digital receipt. One rsETH is supposed to equal one Ethereum's worth of real value. On April 18th, attackers traced to a North Korean criminal group found a vulnerability in the system KelpDAO uses to move those receipts between blockchains. The attackers exploited the vulnerability and printed over 100,000 counterfeit receipts backed by nothing. Then, and this is the critical move, they deposited the counterfeit receipts into Aave as collateral and borrowed $100 million in real Ethereum. By the time emergency systems activated, 46 minutes later, the money was gone. When news of the event spread, a wave of large holders pulled their funds out simultaneously from Aave, over $6 billion in just 24 hours. That caused the remaining liquidity pools to get maxed out. So ordinary depositors, people who had simply parked their stablecoins to earn yield, suddenly were unable to access their funds. Now, what happened next is the part that changes everything about how you should be thinking about DeFi lending. Within 48 hours, Aave froze all rsETH markets across every deployment. They set loan-to-value ratios to zero. Basically, they halted all new borrowing against this asset. No regulator forced them to do that, and no court ordered it. The protocol self-corrected in real time. Then something happened which has no equivalent in the history of traditional finance. A coordinated recovery effort called DeFi United launched voluntarily with no legal obligation, no government mandate, and the response was extraordinary. A number of large crypto wallets, including Consensus and its founder Joseph Lubin, Mantle, EtherFi, committed thousands of Ethereums to the cause under the DeFi United initiative. Aave's own founder Stani Kulechov personally pledged 5,000 Ethereum worth about $12 million of his own money. Deposit also came from the Avalanche Foundation, the Solana Foundation, Circle Ventures. That tells you everything about the scale of the ecosystem response. Total commitment so far exceeded $300 million, took over a $200 million loss. The ecosystem raised more than it needed, voluntarily, in just 8 days. Before we continue, if you find this analysis helpful, hit subscribe. I post weekly analysis on crypto through traditional finance frameworks. No hype, no paid promotions, just fundamentals. Now, let me answer the question I bet you have in mind right now. Can DeFi lending be trusted? I want to answer the way I would have answered in an investment banking due diligence process. Not with sentiment, but with evidence. The first things I look at when evaluating any financial institution after a crisis are the size of the loss, but also the speed and the quality of the response. The size of the loss tells you how long you have to solve the problem, while the quality of the response tells you whether the institution has the governance, the processes, and the culture to overcome that crisis. By that measure, the DeFi United response is one of the most impressive things I've ever experienced in over 20 years of investment banking career. And I want to be precise about why. In September 2008, Lehman Brothers collapsed. The bad debt in the global financial system ran into trillions of dollars. The process of determining where the losses were, who held them, and how to allocate them required US Treasury, the Federal Reserve, and the FDIC acting simultaneously. It took years to resolve. The government bailout of Fannie Mae and Freddie Mac alone exceeded $300 billion. DeFi United raised $300 million in voluntary commitments in 8 days, with no government, no regulator, and no court order. I'm not saying DeFi is safer than traditional banking. I'm saying that when a crisis hit, DeFi moved faster than any regulated financial institutions I've ever seen. And the fundamental error was identical in both cases. In 2008, banks accepted mortgage-backed securities as collateral that turned out to be worth a fraction of the face value. In 2026, Aave accepted rsETH, a collateral that turned out to be partially unbacked. Collateral quality was not adequately verified. The mechanism is different, but the error is the same. The difference is what the system did after that. But now an even more important question. Trust is not built on one response to one crisis. It's built on a trajectory. Here is what the data shows. Audited protocols in 2025 experienced 94% fewer hacks than unaudited ones. Bug bounty payouts hit over $100 million, creating direct financial incentives for researchers to find vulnerabilities before attackers do. Every major advance in traditional finance risk management, Basel I, Basel II, Basel III, was built directly on the wreckage of a crisis, not before, but after. DeFi is going through the same process now. The KelpDAO fraud will produce better collateral parameters, stricter infrastructure assessment, and more conservative bridge risk management. But more than traditional finance managed at the equivalent stage of its development. The Aave events are serious. Real depositors were trapped, some have lost money and hoping to get reimbursed. The collateral risk management failed. There are real problems that require real solutions. But the DeFi United response demonstrated three things. First, the ecosystem has the relationships and the will to mobilize capital at speed. Second, it did so transparently. Every contributor visible on the blockchain in real time, nothing hidden. Third, it raised more than it needed without a single government mandate. The single catalyst I'm watching, how Aave rewrites collateral risk parameters for infrastructure-dependent assets after this crisis. If they manage to deliver on it and the standard is matched across all competitors, DeFi lending becomes structurally safer permanently. That is the answer I would give to a large investor asking whether DeFi lending belongs in a serious portfolio. Not yet in terms of full allocation, but the trajectory is the right one. And 8 days told me more about DeFi institutional instinct than the previous 8 years of its history. Quick disclaimer, this video is for educational purposes only, not financial advice. All investments carry risk. Please consult a qualified financial advisor. If you found this analysis helpful, hit subscribe. I post weekly analysis of crypto through traditional finance frameworks. No hype, no paid promotions, just fundamentals. See you in the next video.